Hello, everyone. Welcome to today's episode on cash flow. Personal cash flow. As you can see on my screen, I titled today's video on cash flow, personal cash flow. Why is personal cash flow so important? Because there are only five items or five things that are important for you as a person to understand for your own personal finance and for your financial freedom journey. You get to understand these five things. And number one, you get to understand your inflow, your income. Where are your income or incomes coming from? The sources, you get to identify them. And second of all, you get to understand your expenses. What is it that is taking money out of your pocket to give to somebody else, to pay somebody else without compensation? What are they? You have to identify them. And these are rooted in your budget. And number three, you must understand, is your asset. You must understand which assets or asset is helping me to generate my inflow of income or cash. And number four, you can understand your liability. What are my liabilities that are causing me to pay, that are causing the outflow of money in my pocket or in my account? And the last one, which is 5, is your cash flow, because cash is king. Without cash, you can't do anything. Without cash, you are impotent. Without cash, you can live, because you need cash to buy your groceries. You need cash to buy clothes. You need cash to gas up your car, to get a car in the first place, to gas it up. You need a car. You need cash to pay for the insurance, and you need cash to pay for your house rent or to pay for your mortgage. You need cash. Every day I always say our life revolves around money and selling, because we're always transacting. Life is transaction. That's why I look at it. Life is transaction, because we're always buying or we're selling. It's either you're buying or you're selling. It's either you're a consumer or you're a producer. It's just the way it is, So today I am touching on personal finance cash flow. And to those of you who are new here, just as an intro, I'm a qualified accountant with 21 years experience working as a finance director, finance controller, and finance manager around the world. I also have an MBA, and I'm also finishing up my PhD in risk management. And lastly, I also have 10 businesses, 10 sources of income, 10 assets, both digital, both physical, and otherwise, that are generating me 6, 7, 8 figures income per year. Okay? So when I'm talking about cash flow, or when I talk about balance sheet reconciliation, when I talk about P&L or income statement, I'm talking from experience, both as a professional accountant and also as an entrepreneur, and lastly, as a consumer as well as a producer. So you're getting it raw. Now, what is a cash flow? Here is a statement, or here is a definition of a cash flow. So it says cash flow is a report or a statement which shows cash generated and cash spent during a specific period in time, i.e. it could be a month, a quarter, a year, or whatever period that it is. And so as an individual who is planning or who is on a journey for financial independence and on a journey for financial freedom, you want to understand the sources of you want to understand the sources of your income, the cash you've generated in the period, and from where and how. And you want to understand the expenses generated in the period, from where and how, and where they are going or where they've gone to. And this is so crucial because this will help you to manage your finances. This will help you to manage your risks. This will help you to manage your cash and cash equivalents. Okay? And because until you know your destination, you may just be driving or traveling to nowhere. So you must know where you're going. Okay? So having defined our cash flow, I repeat it again. It says it is a statement or a report which shows the cash generated and spent during a specific period of time. That time could be in a month, could be in a year, could be in a quarter, whatever your definition and your specification is. Okay, so now that we've understood what cash flow is, with what I've set up here, you could do it for a company in the same format that companies follow. The only difference is companies are doing it on a macro level, while you as an individual is doing it on a micro level. Otherwise, it's the same thing. There's no difference. However, though, when you come to the next slides or the next two slides, items that goes into different section of your cash flow reporting, because you should be generating report every month for yourself. Once you get your budget and you get your income and you get your report at the end of the month, you get your bank statement, you get your pay slip or your report from your transaction, whether it's online, whether you're selling or whatever, you get those, and now you can begin to put in the numbers. Once you put in numbers, you can understand, okay, these are my outflow, these are my income, these are my outflow, these are my inflow, and this is what is helping me to generate this. So I need to focus on this, or I need to eliminate that. I must also emphasize here that often the time we think, for those of us who are just starting our career, I know it can be tempting to, because it is what we've been passed down from our parents or from the older generation, by saying that once you leave college or once you get a job, the next thing you need to do is to get a mortgage and buy a house in the suburb, buy a house in the suburb and get married and then buy a car and start a family. But that is a poverty mentality. That's a poverty mindset. They're only setting you up. If you follow that trajectory, you're only setting yourself up for a failure and for financial disaster. If you read the book Rich Dad and Poor Dad, by Robert Kiyosaki, you understand what I'm saying. If you also read Think and Grow Rich by Napoleon Hill, you understand what I'm saying. So, and a couple of other books that even illustrate at this point. You see, wages, according to a man I love and respect so much, he's passed away now, Jim Rohn. He says, wages makes you a living, but it's profit that makes you a fortune. So you want to understand. Okay? So You going to buy a house immediately when you don't have any cash flow, when you only have one source of cash flow, which is your wage or which is your salary, then you want to enter a mortgage. You want to get a mortgage to buy a house or get a mortgage to buy a car. You're setting yourself up for failure, because why the mortgage for your house might sound like a big investment or an asset. It is not an asset. Asset is what gives. Asset puts money in your pocket. Asset doesn't take money out of your pocket. Asset puts money in your pocket, and liability takes money out of your pocket, which is expenses. So when you go buy a house, take a mortgage and go buy a house, you're paying for the monthly mortgage cost plus interest. You are paying for the insurance for the building. You are paying your land where the house is built, or what we call taxes, either to your council, to your government, or to your local government, or whatever, right? So these are all outflows, and you only have one source of income. It doesn't make sense. And at the same time, you are paying for a car. You bought a mortgage. You bought on hire purchase, or you bought on loan. So everything is draining. Everything is taking money out of your pocket, and there's nothing bringing money into your pocket. Only one source of income, and that can be stressful, and that can strain you. You understand what I'm saying? So and at the end of the day, you don't have anything left. So what I always advise people is, first of all, don't buy a residential house first. If you want to buy a property, don't buy a residential house first. Buy a rental property first. If you want to take a mortgage, or whatever means you want to buy a property, buy that property, buy a rental property, and rent it out. And now let the tenant or the occupants pay the mortgage for you. And at the same time, you get profit on top of that, because every month you have extra $300, $400, or $500, or $1,000 extra. Because when you put when you say, for example, you bought a house, and you put a house on rent, and your mortgage to the bank or building society is save $1,500 a month. That's $1,500 a month. Then you charge the tenant $2,500 a month, or $200 a month, or $2,300 or $2,400, whatever. But you change, then that extra income is already, that's a cash flow. That's extra income for you. And again, you can save up this cash flow, that you can invest it, or you can pick up another property, a lesser property. By the time you have 2 or 3 property of those that are generating you free cash flow, now you can buy your own residential house. Okay, so let's move into, now that we define our cash flow, let's move into the third slide, and that is, like I said, all you need to understand, which I've already covered, all you need to understand as an individual in your personal finance journey are 5 items: income, expense, asset, liability, and cash flow. But most importantly is your cash flow, and that is why I put it on an upper letter case writing, to emphasize that is what is important. That's what you need to focus on. Now, I haven't covered that. Now we'll move on to the next slides, which is where I break it down. Okay. Now, for you, if you want to understand your cash flow, this is a simple way of understanding your cash flow, because this is how cash flow is. You want to know at the beginning of the period your opening balances of your cash flow. And you want to know, first of all, you want to know your opening balances for your cash flow, and then once you know that balance, because which you already know from your bank or from your monthly statements. Now, what are the activities? What you want to know? Has my balance for this month? Because I mean, you get this from your bank statement, of course. Has my balance from the bank increased or decreased? And what is causing that? I want to understand that. And you want to look into that. You want to investigate that. What is causing? What is causing my cash to increase or decrease? The same thing companies do. And then you go to your closing balance. Now, is my closing balance lower than my opening balance or is higher than my opening balance? I hope it's higher every month because that is our goal. So that our closing balance should always be higher than our opening balances. So that because whatever activity we've conducted during the period should yield to increase and not decrease of our cash, and then you have your total, right? And then we take it a little bit further, and that is the breakdown. What are the items that contain in that cash flow? Now, first thing you want to know, this is the something goes to companies. This is how cash flow is being prepared. Although you break the items in more granular detail than what I've done here, but it's the same thing. Now, companies want to know, say they don't want to know cash from the operations. Cash from the operations, like your net income, your tax, your depreciation, your receivables, your stocks. They want to know that. Although for you might not depreciation might not really apply to you, and stocks if you're just an employee, stocks might not really apply to you. But you can as well look at it. Okay, what are if I and also because you're not selling anything, but however, you can as well equate that to your income and say, okay, what am actually my stock? My stock is my income or my going to job and my hours that I'm putting in. Those are my stocks. And now, except if you have extra income or extra cash flow method that you have that is generating extra cash for you. It could be you invest in property or you invest in stocks or you have a dividend yielding stocks or you have a Shopify store, or you have a YouTube channel, or you have Instagram channel, or you have Facebook. I mean, these are or you have TikTok. So these are all these are all cash generating platforms if you know how to use them. So maybe you have one of these. And you can say, okay, payables. Of course, you know your payables because you pay your bills every month, so you know that. And you deduct your payables from all the rest. Say your net income for the month, your taxes. Of course, you also pay your taxes for the period, for every period or every month. And now, what is left? That is your operating cash flow. Is what is left negative or positive? And the next is your cash flow from investment. Do you really have any investment or in terms of capex? Maybe you invested in properties. Like I said before, you have one or two or three or four properties that are generating cash for you, or you not just as an asset, or maybe you invested on digital assets. Maybe you've made a video or on YouTube, or you've written a book or other means of digital assets, or you have a blog that you are doing affiliate marketing through that blog and you're generating money, and you're investing on that, by in terms of updating your blog sites and putting your blogs in and all that stuff. These are all investment. This is all I call, because they don't wear out 1 year, they're more than 12 months. So obviously they are long-term investments. So I would say these are all investment activities. And now the last portion or the last session is your financing activity. And with your financing activity, you have things like changing long-term debt. This may not really apply to you, but it should apply to you, because if you are if you are if you've taken a mortgage to buy a property or to buy something, so this is a long-term debt, of course. And at the same time, credit lines, maybe you have your credit cards. These are long-term debts, of course, or not. This is a long-term debt. So you have to factor these all into your cash from financing activities. And also, you have to go a little bit deeper than that. You also have to look for that to, of course, you don't, common equity may not really apply to you, but common equity is what you own, you know. Kusha would say, okay, common equity, I would say, for my job, of course, what is left from my job, I would say that's my common equity anyway. But that aside, that may not apply to you. And then dividend, of course. Cash flow from financing, dividend may not really apply to you as well, but you may have invested in dividend yielding stocks that are paying you dividend every month. So this is the format of a cash flow report or statements that you can prepare for yourself, or or you can um, or you can go through every month to understand most what is important. That is your cash and your cash flow. You want to understand what are my cash generating assets. That is so important, because without cash, you can do nothing. You must understand your cash flow, because cash is king. Cash is king. You need cash to invest. You need cash to acquire properties. You need cash to pay for your dividend. I mean, to pay for your stocks. You need cash to build a blog site or a website. You need cash to pay for Google ad or Facebook ad or whatever promotion you're using. So you need cash for all these things, and that's why, of course, you need cash to pay your rent, to pay your mortgage, to buy clothes, to feed, and all that stuff, to pay for your car and things like that. And that is why cash flow is so important. Cash flow report is so important. And this, I urge every single person to prepare cash flow, because if you don't prepare cash flow statement for yourself, you don't know where you're going. You don't have, you're just traveling without destination, and which means you have no plans. And as long as you have no plan, you cannot budget, and so therefore you just living like yo-yo, whatever that comes. And that is not the best way to live this beautiful life and make the most out of it. Therefore, I hope this has been of a big help. And if it has been of a good help, or if it has been insightful, if it has been helpful, or if you found the video helpful or good, give it a thumbs up and share it. Hit that notification bell for more of similar content, because I produce similar content on finance, because as a finance person, this is my passion. I have an enormous passion for finance. I love finance so much. I love finance. I love risk management. I love, of course, I'm a political. I'm a political junkie. I love politics. Also, I love technology. I love technology a lot. So, and yeah. So if you find this video helpful, please give it a thumbs up, subscribe, and share it. Until next time, keep your eyes on your cash flow, because your cash is king, and you get to keep on top of that. Okay. Until next time, take good care of yourself and each other. Bye bye.